Now the IPO is done. Is there anything that surprised you about that whole process? Was it more difficult, or was it simpler than you thought it would be? And is that chapter kind of over now with you and Just Eat?
Well, all the hard work was done by the management there. I'd say the things that we influenced a little bit with respect to the Just Eat IPO was there had been a clause with respect to London, and it was always clear for Just Eat, because they had such a strength of business here in the UK, that they were going to list in London, and we were very happy with that choice. But actually at the time we started to think about it, if you wanted to list on London, you had to list 25% of your company, i.e. sell or get diluted down, but to 25% of the company. And all the investors in Just Eat loved the company, didn't particularly want to sell down 25% of the company at the stage we went public. And actually Index, with various other people, had lobbied the government to introduce this new segment on the London Stock Exchange that you may have read about, called the high growth segment, where you can actually list a company with a slightly lower percentage of equity being listed, much more similar to what happens in the US, where typically only 10, 12, 13% of a company is listed. And Just Eat was actually the first company that used that high growth company exemption to get onto the London stock market. So we did play a bit of a role behind the scenes in influencing that change. In terms of the IPO process, it's the same as the first pitch you make with your business plan to your first angel investor. It's persuading them that it's describing the idea very, very simply. It's explaining why it's defensible. And explaining, how you're going to achieve the goals that you set out for. So in a sense, the only difference is, when you do it with a VC, the VC only has very, very limited time and availability to check that what you're telling them is true. Whereas when you go public, you've got to tell a compelling and simple story. Then you've also got to produce reams and reams and reams of data, and numbers and financials and audited material to actually get through the hurdle to go public. So that is quite a big effort for the CFO and his team. But yeah, basically it's all about telling a story, and that's what educating founders to be ready to tell that story is a key part of getting a company ready for IPO, and we definitely tried to help a lot with that. And David, the CEO at Just Eat, has done a fantastic job at that.
And that was a huge success, having a big IPO like that. And I mean, that's big, right?
It was big. So it was a funny moment for me, because for a long time, people were criticizing Europe, saying there are no great tech companies that came out of Europe. And every time when we went fundraising, and we were there like the entrepreneurs are occasionally, with cap in hand, trying to raise money, a lot of our investors would be kind of say, is Europe really going to produce anything? And for 10 years, we'd had to say, listen, we're doing quite well. We've had Betfair, we've had Skype, and we've got these other things that look good. Just trust us, Europe will deliver. And then suddenly we had a kind of a real flowering the last 12 years, the last 12 months, where an awful lot of these things, like buses, happened at the same time. So, and I remember there was a funny moment for me. Just Eat listed, I think, the second week in April, and there was King listed the first week in April. So King I'd been involved in 10 years ago when we first did that investment. And there was a critical call, the call that you have the night before IPO, where the bankers and everyone else goes on the call. They tell you how the roadshow process has gone. They say they were this many times oversubscribed. And I had that call with Just Eat, and then with King, and then I had another call related to the Just Eat IPO. Basically, we were going to announce the intention to float the next day. So I had two of these calls, and I just managed to coordinate it so that one was after the other. And I was coming back from Stockholm, where I'd been on a business trip, and the only way I knew that I could guarantee to be able to do both these calls was to actually stay the night in the airport hotel in Stockholm and then fly on the next day, because I knew if I flew, the plane might be delayed and I'd miss these critical calls. So I did these two calls, one after the other, and at the end of the call, the bankers said, so congratulations, your company will be listed tomorrow and it's going to be worth X billion on the New York Stock Exchange. And then a similar call with Just Eat. And then after that, I was just on my own in an airport hotel
Crack the champagne,
walked up to the mini bar. It was a kind of surreal and odd moment for me. It should have been the pinnacle of my career, but it was quite a reflective moment. But we did celebrate a little bit a few weeks later once Just Eat went out.
That's a great story. I love it. Don't miss London Real. Subscribe now.
Many technology entrepreneurs don't know how to pitch their startup, and when you're doing a startup you can't afford expensive PR people and things like that, so you have to pitch the media yourself, and they weren't doing it right. In London you have the financial industry, financial tech industry is very big, you have a fashion industry, it's very big, media is big, arts, culture, you name it. So all these vertical industries are all equally big. Silicon Valley is no longer a place, it's a state of mind. So if you have that state of mind, you can do anything.